Good morning. Good morning. Go ahead and make sure that my recording is going. Sorry about that, guys. I'm gonna note that, but I want to get started today. There's gonna be a lot that we have to cover because I'm expanding out the market update. So you guys have seen us kind of go from we were covering those pre-COVID numbers and post-COVID numbers. We've been looking a lot at Los Angeles County. And what we found and what I've heard from you guys as we're having conversations about where your clients are looking, that's expanded, right? That's expanded. We've got a lot of clientele that are migrating out further to Riverside County, to San Bernardino County. We have a lot more clients that are interested in looking in Orange County, right? So we've expanded the market update. Because of that, it condenses our time a little bit, right? Because there's only so much that I can share with you guys in 30 minutes. And so what I want to do, because there's a lot of additional information to cover, I will get to as much of it as I can today, but on Thursday, I'm going to be doing another session like this that is really more focused on industry news and how that too, in addition to what's going on in the market, is going to impact you, is going to impact your client. So a couple of things. I know there's been some questions about this Department of Justice ruling, right? That's come down the pipeline for the National Association of Realtors. We're going to cover that in depth on Thursday, because I want to talk about what that's going to mean for us and what does that look like. Proposition 19, right? Which is another big hot item right now, because of the impact that it's going to have on our clients, especially coming into 2021. We're going to be digging into that as well. And then that's actually going to be followed up by a session later in the month that's being done by our government affairs director for the Downey Association of Realtors. So I'll keep you guys posted on that date as well. But for now, let's go ahead and jump right into the market numbers. Let me go ahead and share my screen with you guys. There we go. All right. Oh, nope. There went my screen. There we go. Okay, perfect, awesome. So let's go ahead and get started on this here. The first thing I want to look at, and I don't know why it's zoomed a little bit weird here, guys. Let me see if I can. Nope. Okay, so we're just gonna go with it. It seems to be zoomed a little weird. The one thing I want to note right here that we started talking about last week. So anytime we look at any major changes or any major dips, especially as it relates to things like our showings, a couple of the things that we always want to be cognizant of is what's going on at any given time. So we had seen this little bit of a dip that started happening right over here in our showings with the weeks leading up to Thanksgiving, with a major dip on Thanksgiving week. Now, we always want to inspect what we're expecting, right? And so when we see that sort of dip in showings, if we're not thinking about what's going on in the world, it can be really misleading. So we want to inspect that data. We anticipated that it was likely that we were going to see showings jump back up, and we saw that within this past week. Now, given we're not jumping back up to what we were as we kind of entered in October, so we are seeing that showing rate kind of even out a little bit. And this is likely that we're going to see this continue and then have a couple more drops as we kind of are in this holiday season, as well as this more severe lockdown. That's definitely going to have a little bit of an impact in terms of our showings. And yet we know that we're normally we've seen, we look at 2019 and we've seen this kind of steadiness. We had this dip right at the beginning of the pandemic, this pent-up demand, and then additional showings that have really kind of peaked within this past year. So no major trend here other than it being evened out a little bit, and us anticipating a couple of dips in terms of the holidays that are coming up. Where we really want to dig in a little bit more is let's go ahead and look at these price trends. So we're going to start with Los Angeles County. We're going to go through the 4 counties, and I want to remind you guys that these levels in blue, so we have our under contract, our sold numbers and then our new numbers. And what we're looking at is this 12-week period in comparison to the 12 to 24-week period prior, right? When we look at Los Angeles County, our median price point for under contract properties within the last week is 680, right? It was 680. That under contract, we saw, you can see right here, if you're looking at the numbers, week over week, it was a little bit of a dip, not significant. But if we're looking in the long term, that 12-week period versus the 12 to 24-week period, we can see that we're up at 0.3%. So nothing super major when we're looking at our under contract price point. This hasn't fluctuated too much during the past 24 weeks. Now we look at our sold price, right? Our sold price is going to be the price point in green. And we see 670 as the median price point in Los Angeles County. Again, if you look at these two bars week over week, and even within the past couple weeks, that's still fairly even. That's not going to be a major shift. However, if we're looking at the 12 to 24 week period past, we are seeing about a 4% increase overall, right? We've seen that reflected as the prices continue to go up. When we start talking about inventory, I'm going to note for at least the foreseeable future right now, until we experience some major changes because of this forbearance situation, we're likely going to see these prices stay either pretty even or continue to have slight increases, right? And that's just as a result of the inventory issue that we're having. Now, if we're looking at new on the market, right? New on the market, we can see our median price point within the last week, right? Within the last week is 696,000, right? 696,000. The average in the last 12 weeks has been about a little more than 691, right? And that's a 1.6% increase from the previous 12 months. Let's look at the trends in terms of our inventory, and then we're going to talk about what this means for your clients. So when we look at our LA County inventory trends, now, if you remember, we talked about this last week. Last week, we saw a major dip, right? We saw a major dip. We saw a lot of these numbers almost cut in half in terms of, just in terms of the number of, give me one sec, guys. Let me make sure and there's a little bit of background noise. So if I'm clicking you, it's just to mute us on there. But looking at the Los Angeles County inventory trends. So what I really want us to be cognizant of here, there's going to be a couple things that we look at. Last week, we saw a major dip here, right? We saw a lot of these numbers almost cut in half in terms of the new inventory that had hit the market. We saw the number of sold homes go down, and we saw the number of under contract homes go down. Given holiday week, right? We always want to inspect what we're expecting before we determine whether or not it's an actual trend. So we saw that number decrease at a really high level. Now, as expected, within this past week, the numbers went up, right? They went back up, and they look a lot more similar to the week before Thanksgiving. Our under contract, we had 1,032 homes go under contract within the past week. When we look at our sold property, this number, which has been pretty high here in the green, there was 1,257 homes that sold within the past week in Los Angeles County. And new inventory also went back up, right, to 1,008 homes that they hit the market last week within Los Angeles County. Now, that's great because we see those numbers continue to go up. And yet what we're still seeing, if you were to take out this Thanksgiving week and take a look from here, September 28th, right, at this red bar, the red bar, which is our new inventory, right? This red bar, we've been going down week over week, right? We've seen this decrease week over week. Now, traditionally, in the fourth quarter, we experience something called seasonality. That tends to happen in fourth and first quarter. We talk about this every week. Seasonality is just during that holiday season, and in the first quarter of the year, we tend to see the sales numbers dip, right? People want to spend time with their families. People are not necessarily wanting to always list during the holidays, right? That's a trend that we experience every single year. This year, because of the pandemic, has been a little bit different. We saw the major dip in the second quarter. Whereas in the third quarter, the fourth quarter, we've seen very or significantly higher numbers than what is normal during kind of this period of time within the market. Now, within these numbers here, inventory continues to go down, right? Which is normal. The difference here is if you look at these in terms of our sold, right? Our sold is in the green. You can see that this number has actually gone up, right? And the same thing within this past week, we've seen the sold number go up as well. This causes a couple issues, right? One, it's not typical of this season of the market that we see these sales numbers continue to increase. And yet they are, because we have increased demand. Some of it can be attributed to pent-up demand from the second quarter. But in reality, what we're seeing is kind of the coming together of these very, very low interest rates. The segment of the market that's responsible for the most home purchases having the lowest rate of unemployment, right? And being able to go out and purchase property right now. That then is causing a lot of demand as it relates to the showings that we're seeing right now as well. And it's causing a lot of competition. That's what drives our prices up. So one of the recommendations that I have for you is right now, I would be utilizing the Michael Lewis marketing suite piece that is the top reasons to sell during the holidays, right? Would be a great marketing piece to be using right now. You can find that in your Michael Lewis marketing suite toolbox. I'm also going to be posting within the hub, I'm going to be posting a link, which is a holiday script that you can utilize right now during this kind of season. But it's also going to give 12 reasons that you can send out via email to your clients as well of why they might want to list during the holidays, right? So, or why they may want to list right now. That was provided by Maps Coaching because we're watching some of these trends and what's going on within this market. The other thing that you want to know with your sellers, right? We looked at some of that pricing trends that we're having. You still want to make sure that you're pricing competitively. We are still seeing multiple offer situations, and yet we want to ensure that we're pricing competitively for our clients so that they are not sitting on the market, right? So that they are actually getting multiple bids, so that they have the most control over terms, especially as we run into more and more appraisal issues that are coming down the pipeline. I want to remind you guys on the appraisals, right? Make sure you are vetting the appraiser. If they're not familiar with the area, we want a new appraiser. If they've not dealt with new construction and it's new construction, we want a different appraiser, right? If it has an ADU and the appraiser has never dealt with ADUs, we want a different appraiser. You want to have as much control as possible because we're seeing a lot of the pricing kind of still continue to increase, inventory continue to go down. And so that competition is almost artificially driving these prices up pretty significantly right now. Now, this is going to be for Los Angeles County. Let's go ahead and take a look at Orange County. I'm going to note, we see a lot less fluctuation within this past week in pricing here, right? We see our under contract pricing in Orange County was $799 within the past week. Our sold price was $800K. Our new inventory came out at $800K. There's a lot less fluctuation here in this market, especially within the past week, right? It's been pretty even across the board as well. If we look at this 12-week period versus the 12 to 24 weeks prior, we're seeing that our under contract price has gone up about 0.7%. Our sold price about 1.6%, not as significant as what we're seeing with the 4% in Los Angeles County. And then new inventory 0.5%. Again, not as significant as what we're seeing in the increases in Los Angeles County. So keep that in mind when we're looking at higher price point. What do we tend to see? Orange County has a higher price point than Los Angeles County. In higher price point areas, we tend to sometimes see a little bit of a decrease in that demand, especially as we start getting into our luxury homes. That's where we see bigger price drops as well. Now, looking at the inventory, right? Looking at the inventory, again, starting in September 28th is where we started seeing the dip. If you look at our red, right, we started seeing that dip in new inventory, a more significant dip for the holiday week, but that pops back up pretty much in alignment with where we were starting on the 28th. Again, right, new inventory, that's a significant decrease in inventory that's down. And like we're seeing in Los Angeles County, our sold numbers are up significantly. Sold numbers up 7.5% versus the 12 weeks prior, which again is very, very unusual for this time of year. And so also in Orange County, you're going to see some of the same things that you're seeing within Los Angeles County in terms of the competition, the driving those prices up, especially because the inventory continues to decrease as well. So let's go ahead and take a look. The other note here, so I want to note as well, this is really important, is the under contract. Our under contract inventory has gone down 9.7% from the 12 weeks prior. Now, this is going to be significant because this is going to impact what quarter one looks like, right? As we start seeing everything begin to drop right now in terms of under contract within this 12-week period, this then impacts the next quarter, right? So we may see this sold number go down over the next 12 weeks or so. So we want to keep an eye on that trend as well. That's Orange County. Now let's go ahead and look at our Riverside County. So Los Angeles is kind of that median price point. We see Orange County being a bit of a higher price point, and then our price point goes down as we get into Riverside County and then San Bernardino County. But our under contract price point here within the past week, $439, sold properties at $445, and then new inventory hitting at about $430. So again, that's going to be not a huge fluctuation. Again, this new inventory is that price point. It's probably going to be driven up. So we'll see the sold price be a bit higher than $430 in the coming weeks as these properties are going under contract. Now here, unlike in Orange County where we saw our under contract dip, right? We're seeing under contract go up. We're seeing sold go up, and we're seeing new inventory go up. The pricing here, right? Under contract pricing, sold pricing, and new pricing. This isn't going to be as our under contract and our sold price is pretty even here in terms of the increase that we've experienced, and then new at about 1.9% increase on that 12-week period. Now let's look at the inventory. Again, right, the holiday week, we saw that dip, a bit of recovery here, but we can see, so here in both Los Angeles County and Orange County, we started that trend going down in terms of new inventory, started about September 28th. Here we're seeing it start about a week, it was a little bit delayed, so we see that inventory trend going down starting at about October 5th, right, about October 5th. Under contract inventory within the past week, there was 532 properties that went under contract in Riverside last week, 603 properties that sold, and 487 new properties that hit the market. Now, again, we're looking at this 12-week versus the 12 to 24 week in terms of these trends. We're seeing dips across the board here for Riverside County. So our under contract is down. That's going to impact first quarter, what we're seeing in terms of the sales. Sold properties are down, and new inventory is down as well. I'm really interested to see that continue and how that trend is going to play out for the first quarter of next year. But my guess, just looking at this right now, is that we're going to see continued dips in sold inventory specifically over the next 12-week period as well. And then San Bernardino County. So again, we're at an even lower price point as we get into San Bernardino County. Our under contract price at 382. That's a 0.8% increase versus the 12 to 24 week period. 5.5% increase in sold price. The sold price within this past week was at 400K on average. And then the new inventory that hit the market was at about 400K as well. In terms of inventory, again, a little bit of a recovery here from the prior week in terms of the holiday week in terms of our new inventory. And yet new inventory here is down 10.6%, right? 10.6% is a significant decrease. Sold inventory is up. And again, under contract inventory is down as well, which is also really going to translate to what happens in the first quarter of the year. So a couple things on this, guys. As we look at these numbers, as we're looking at the trends, what's really important for us to take a look at and in how this is going to impact us going forward. We've seen prices, right? If we look at any of these counties, let me go back. So you can see here, price under contract, sold, new is up. Price for Riverside under contract, sold, new, price is up. Orange County, price is up. And Los Angeles County, price is down. Another trend that we're seeing across the board. Los Angeles County, new inventory is down, right? Our Orange County inventory is down. Riverside County inventory is down. San Bernardino County inventory is down. And yet sold properties are still going up in every single county. That's important because on a seller side right now, what does that tell me? Is I still have an opportunity to get into a very high demand market where prices are up and sales are up, inventory is down, and the law of supply and demand says that I'm going to get the highest price point for my property in that type of market. There's going to be higher demand because there's diminished supply in the market right now. That's what you're going to want to communicate to your sellers. You want to be talking to them right now. You really want to get ahead of that conversation with those that are potentially going to be looking at potentially selling or thinking about it, especially as we get into this holiday season, right? People are a little bit more worried as we get into the new year of what happens next, especially as these various moratoriums are going to be getting lifted in February. So that's going to be a really major conversation we need to be having with all of our sellers right now. Right? That's extremely important that we have that conversation with our sellers. Our job, our fiduciary duty for our clients is on one side, part of it is that we help our clients build wealth, right? The other side is sometimes we help them to protect their financial reputation. So if they are in a position where they are essentially going to be maybe forced to sell next year and they've been holding out or waiting because of the moratorium, chances are that they have equity, and right now might actually be the best time for them to put their home on the market to get the biggest bang for their buck, right? To get the most back, because we're still seeing that trend we're still seeing that trend of sales being up. Now, we also saw across a couple of counties, we're seeing under contract go down, right? We're seeing under contract go down. What does that mean? Those counties might also be a great opportunity for your buyers, right? If we're seeing under contract inventory go down, then we're seeing a little bit of a decrease in that competition. It wasn't a really significant decrease across the board. And yet those might be some of the markets that we want to take a look at for our buyers, right, as well. And the other note that I want to say this, because a couple of you have come to me with challenges on getting your buyers into a particular property or what that might look like as you're submitting offers. I really want you guys to look at your buyers and see how they're packaged, right? If your buyer is on an FHA mortgage, if your buyer needs closing costs, if your buyer needs any additional type of support, or they're on some type of a program that is going to make the deal a little bit harder to close, that doesn't mean you're not going to find them a property. What it means is that the properties that are fresh on the market, that are really high competition, that are beautifully turnkey, might not be the properties that they have a chance at getting right now, right? And that's just, it's a high competition market, and people are looking at how the client is packaged. If they need closing costs, I highly recommend looking at some properties that maybe have been sitting on the market a little bit longer, to see where they might have a little bit more leverage in the negotiation process. The other thing that's going to be really important is that sometimes you will get your offer accepted, not on price, but on terms, right? On terms. We're seeing a lot more creative scenarios right now. You see a lot of sellers that are also wanting to get into the market. They're wanting to buy a replacement property, right? And what's happening? Well, they're running into the same thing that your buyers are running into. They're having trouble finding or getting their offer accepted on a property. And so we're seeing a lot of sellers that are requesting rent backs, right? That are requesting rent backs. If there's questions that you guys have on how to write up a rent back in a contract, and that's a request that you're getting, please, please, please call myself, call Ed, right? So that we can help you with that, because it's a little bit more of a creative solution. If you're writing up an offer and you want us to take a look at it and see what the trends look like, or what we're seeing in the market or what's working, one, I always encourage you, make sure you get on the phone with the listing agent, right? Get on the phone with the listing agent and ask them the question, what besides price is important for their client? We know price is always going to be an issue, right? We don't want to waste the question just on price. We want to find out what else besides price is going to be really important to the clients. We may find that it's a rent back. You may find that it's, they don't want to do any repairs. It's going to be sold as is. You may find that it's whatever it might be, right? That's going to be really important to them. A shorter closing time, a longer closing time. We kind of see it all, right? We see it all, and those are going to be really important when you write up an offer. That sometimes there might be another offer on the table that's at a higher price point, but because the listing agent already knows that we're likely to run into appraisal issues, they're looking at terms versus just price, and they're advising their clients accordingly. So you want to make sure that you're taking that into consideration as well with your clients. If you are being asked to waive appraisal contingencies, I really want you guys to be careful with that. You really want to make sure that you are truly explaining that risk and what that looks like for your client, to make sure they are 100% comfortable with making that decision, right? Because our job is the fiduciary duty that we owe to our clients and taking care of our clients. And that's a huge, it can be a risk. Of course, there's other contingencies that still allow them the opportunity to exit the transaction. However, they could run into issues, especially financially, if they're not able to, pay a second appraisal, to pay for multiple inspections, if then they fall out of escrow and go to a next property. So you just want to make sure you're really having that conversation with your clients. And as you're writing your offers, that you're running a quick comparable as well, to make sure that it supports the price that you're putting forward, if you want to ensure that appraisal is not going to be an issue later down the line. So a lot of information today. A couple things. I know we're a little bit over time, so thank you guys for bearing with me. A couple things I want to note. We are seeing a little bit of a slight increase in the number of active forbearance plans. That wasn't unexpected, right? It wasn't unexpected, but we're going to keep an eye on that. We're really going to see that impact of these forbearances in the next quarter, right? That's where we really see the major impact of the forbearance market, is going to be in quarter number 2. Now, on Thursday, we're going to be going over a couple more industry related updates that are also going to impact your clients, right? And are going to impact your business, that are really, really important. We'll dig in a little bit more into some of the forbearance data. The November data report has not been released yet by Black Knight, but we'll be keeping an eye to see when that gets released so that we can go over that forbearance data a little bit more in depth. What we're going to be talking about Thursday, the Department of Justice and National Association of Realtors ruling is going to be a big piece for us to touch on Thursday. We're also going to talk about some other interesting news that we're seeing and some of the implications. For example, the FTC is actually in the process of suing CoStar, right? And what does that look like? And what's that impact going to have on our industry? And then we're going to talk a little bit more about Prop 19. Jen, I see your hand is raised. You want to come off mute?
Hey, Monica, good morning. Happy Tuesday, everybody. Just wanted to piggyback on the comment you made regarding if we were to make offers on properties with no appraisal contingency. What Ed had suggested is if we are going to do that with our buyers, to include the market conditions advisory and have them sign that so that it clearly goes over the ramifications of making a contingent and a non-contingent offer.
I love that. Thank you. See, that's why Ed is all contracts all the time, right? The market advisory, guys, that's going to be really important as well. So if you are doing a waiver of appraisal, we always want to make sure that we are our job is to educate our clients, right? Our job is also not only is it to educate our clients, but our job is to do what they want. Right. And what's in their, we can advise them on what's in their best interest. And we want to make sure that we're always advising them on what's in their best interest. And ultimately, we're going to do what they want to do. Right. So long as it's not unethical or in violation of any ethics, any ethics requirements. So utilizing that form is a really good way to also protect ourselves when they've made that decision that they want to go ahead and waive the appraisal contingency. That CAR form, MCA, Market Conditions Advisory. So it's going to be a really good form to keep noted. With that, guys, I know we went over quite a bit today and there's a lot more on the calendar. I know some of you guys are doing business planning clinic, in which case you can jump right into that for day 2. It's being live streamed on KW Connect at 10. If you're like, hey, I really want to make sure that I can also attend contract class, it's probably going to be a little bit more of a review today because we have business planning clinic going on. You're more than welcome to jump in. Know that the live stream recording of business planning clinic, from what I've been told, the recording will be available later as well. So if you miss a little bit of it or you missed it yesterday and you want to jump back in, over the next couple of days, it should be released as well. I also know some of you are going to be on the commercial summit that started earlier this morning. So I know some of you are already on that. So if you're watching the recording, I hope you're enjoying the commercial summit. Today, that's going to be 3 days. That is a paid ticket with registration. We sent out the links in case that's an area of interest that you have in joining. You haven't missed all of it, and I recommend jumping into that as well if commercial is an area of interest for you. With that, I hope you guys have an absolutely phenomenal rest of your day, and I will see you back on Zoom here to talk about industry updates on Thursday. With that, good morning, guys, and have a good rest of your morning.
Thank you, Monica.
Absolutely.